Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. A lot of volatility in the market lately, a lot of people overly fixated on Europe and other things going on around the world. At least some people feel that way. We'll see how our panelists feel about what's going on in the market. We have editor-at-large Steve Reitmeister with us this time around, research director Shiraz Mian, and market technician, top stock screener Kevin Matris. So, Shiraz, you have been saying in your commentaries that you've been penning this past week, there is an overfixation on volatility, on Europe, on China. But it seems to be everything that people are focused on. They don't want to, or they can't, pry themselves away to get focused on anything else.
I continue to believe that. I continue to believe that the fear factor, if you will, from what's been happening in Europe and concerns about how China will pan out in its efforts to soft land its economy, is dragging the U.S. and the outlook for the U.S. Excessively, more so than is needed. I think the U.S. In the current global environment represents the most stable, the most visible economic and market outlook than is available elsewhere. I have been humbled by the level of volatility over the last couple of weeks, because I have been continuously saying it's unjustified and will come down. Right. To get more focused on the internals and the fundamentals of the U.S. economy. It hasn't happened yet, but I continue to believe that we are heading in that direction. The U.S. economy is growing, the labor market is improving, the earnings outlook looks good. So there could be some risk to the growth. There could be some risk to the earnings, but not to the extent as the level of volatility would tell us.
Does the volatility concern you?
I think it's unfounded. I think the fears driving it are unfounded, and I think it'll come back to normal.
Let's take a look at it technically. Kevin, does the volatility bother you that we've seen here in the past couple of weeks?
Yeah, I'm not overly concerned with the volatility, but it does make trading a little bit more difficult. You know, even good stocks can get, unjustifiably pushed around. So it does make the whole situation a little bit more treacherous, if you will. But I do kind of think that volatility is here to stay for at least the foreseeable future. You know, the drops that we had seen over the last couple of weeks has completely taken all of the complacency out of the market. And I think this is kind of keeping people on pins and needles. Yeah, there are a lot of problems out there, Europe being one of them. But it's interesting. I was talking to Steve the other day, and if you were to look at how everybody is really wringing their hands over this Greece situation, and I don't mean to downplay it by any stretch of the imagination, but this thing, the news hit the wires, I believe, back in November. And when it first hit the wires, I mean, the market continued to power higher. So we are right now, give or take a couple of 100 points, where the market was when the Greece situation first had transpired. Mm-hmm. So how Europe deals with this, what China is going to do and everybody else, that is going to ultimately answer what happens with the market. But I do have to agree with Shiraz as well. I don't think that this contagion, if you will, is going to completely ruin the economic recovery. And one point I do want to make, though, about volatility and about the market, even your best stocks, they don't go straight up. They stair-step their way up. A couple of steps forward, one step back. A couple of steps forward, go back a little bit. It is not out of the question to see this happen with economic indicators as well. So you've seen a couple of, anemic economic indicators, or at least economic indicators that were below expectations, but we've seen some fantastic things, maybe a little bit of a pullback. I think that you're going to see this trend resume.
All right, Steve Shiraz mentioned fundamentals a couple of times in his answer, but it's pretty difficult to detect, at least from the layperson's point of view, whether this market is currently trading on fundamentals.
Yeah. Well, it's a matter of which fundamentals they're taking a look at, okay? The folks that are the most bullish right now and believe this is a buying opportunity are looking at the fundamentals, which is that we are having a recovery in the United States, that earnings, this past earnings season, you really couldn't ask for better, and the earnings estimates for corporate American earnings are on the rise for this year and next. So on that level, those fundamentals, that's the people who are saying to buy in. The fundamentals that people are looking at who are bearish are saying, well, hold on, that may be true, there's a recovery going on now, But you remember that pile of debt that we swept underneath the rug? Well, there's the rug, and there's all the debt. It's still there, okay? And this is where, you know, chicken's coming home to roost. Is it's starting to pop up around the world and into debt issues, solvency issues, and so on and so forth. And they're saying, so past the horizon of the current economic recovery, it can be a little bit dicier what will happen. So I'm taking a little more balanced view. I am hopeful that, you know, we joked around here that the United States is the best looking horse at the glue factory, okay? So we got problems, but other people have worse problems, and maybe that's good enough for us to stay on that growth path. I would just say be mindful that the bearish case may have some good points, and we do have to see how these solvency issues play out, and it could lead to more risk aversion, lower market.
Are there buying opportunities here, or should we wait?
It depends which camp you want to play in. I'd say, you know, there's a good case for, you know, a bounce here, you know, which is we saw strongly yesterday, and there's always a time to buy quality companies that are trading at a discount. Certainly, we've seen that happen with a lot of companies trading for 20% less than they were earlier, and yet their earnings outlook looking phenomenal. I would just say perhaps take a slightly more conservative stance. Given that really things could break either way.
So do you want to commit, bull or bear?
I'm committing to
things could go either way. Okay.
What I'm saying is these two are a little more in the bullish camp, and I've probably been one of the strongest bulls. I've just been kind of like moving to a centrist. And if I'm moving to a centrist, maybe that means I am getting a little more bearish. Yes.
Okay, bull or bear, Shiraz?
I'm definitely a bull. Definitely a bull near term on the market, and I would second Steve's view on being a little bit careful with taking on too much risk near term. I would gain exposure to the domestic market. I would go for large caps. I would go for blue chips. I would go for dividend-paying stock, kind of constrict yourself a little bit from way too much international and emerging markets exposure. So yes, I'm hopeful, and I'm bullish on the market.
Kevin, real quick, bull or bear?
Short-term concerned, long-term bullish.
Okay, there you have it, the latest thinking from the round table. We hope that the week ahead is a profitable one for you. We thank you for joining us, and we'll look forward to seeing you next time right here at the round table. With all of these guys, I'm Terry Ruffalo.